Welcome back. Still with me in the studio, Harry Botha, research analyst at Avior Research, and Schalk Malan, executive director of actuarial at BrightRock. We're talking about retirement savings for that, and during the break, both of the guests were busy chatting about specifics here. Harry raised costs involved. You would just go back on that, Harry. You were saying that maybe that's a reason why people have gone into other investments.
Yes, exactly. Thanks, Jeremy. There has been quite a big shift away from life insurance as a vehicle of saving over the last 10 to 20 years. And to a certain extent, it has been because of costs and the disclosure of those costs. So probably a few years ago, you wouldn't be able to work out what the costs were on a life insurance policy that you were buying. And it was obviously easier to work them out on a unit trust where you get an expense ratio and a fee, an annual percentage fee that gets charged. So we are starting to see a shift back towards life insurance products as a vehicle of saving, but it is happening gradually. So yeah, nothing that's going to change very quickly.
But it's what we were saying in the first, or what Schalk was saying in the first half of the show, that this sort of disclosure that has opened up has actually made it easier for people to become involved in the life insurance form of investment.
Yes.
Yeah.
Yes, exactly.
Now, I heard you breathe a sigh of relief there when Harry said people are moving back into life insurance. I heard you going, have you guys seen this sort of move back into it? And how does life insurance, because this is what you were talking about in the break, how you use life insurance as part of that portfolio?
Absolutely. So Jeremy, firstly, there's definitely a trend shift towards life insurance vehicles, because there are certain benefits of putting it into a life insurance platform, getting more accessibility to more funds.
What?
For example, a greater...
What's in it for me? I'm your client. Sell me your life insurance now.
So I think where the biggest value lies is if you have your investment planning together with your actual risk planning in a product. So for example, your typical traditional life, disability, dread disease protection, which is a key element to any financial plan, especially if you think about your retirement provision. For example, I'll give you a great example. If an individual becomes disabled today, he needs a product that actually can not only support him on his income provision to be able to continue his savings until his retirement age, but potentially even beyond that. And that's where I think there's a significant trend in this space, especially if you look at what BrightRock has done in terms of delivering a product that says, if you become, for example, disabled, you need to be able to have that income even beyond your retirement. So in other words, to be able to supplement or even enhance your retirement savings, because you might not have the ability to save. And that's a key element that one sometimes could forget, that saying it's one thing of affordability, which is a universal constraint in terms of spending life insurance, short-term, all of that. But there might also be a disabling constraint, or just simply the breadwinner has passed away. So that's where I think we're also seeing a significant move that people actually consider their retirement planning together with their life insurance, their risk cover, as one solution that they need to construct. And there, the big challenge then happens between that trade-off, Jeremy, between what is my provision for my investment and what is my provision for my insurance side. And having that trade-off, and then making sure that your product that you have on both sides are efficient and actually address exactly what your needs are as a consumer. So in other words, just to give you an example, on the life insurance side, you might consider to rather, instead of just buying a lump sum amount of cover, you might actually prefer to buy cover for when there's an event to settle my debt, or if there's an event to make sure that my income is provided for my dependents. And that's something that we see a growing trend on the life insurance part, really spearheaded by BrightRock, to be able to deliver solutions that provide for that if your retirement savings are not sufficient.
Okay, remind me, Harry, when there's a knock on my door, and if I look through the peephole and it's Schalk standing there, not to open the door, because geez, this oak can sell you anything. I'm telling you right now. But yeah, that made absolute sense.
Excellent.
Absolute sense to me. So now, why aren't people buying more life insurance then? Where are they going? Where are we seeing? Because there are billions of rands being spent on forms of retirement or investment. Where is that money going?
Well, I think, yeah, to a certain extent you have to look at the consumer and their needs, and obviously life insurance and savings are driven by disposable income, and at the moment you're seeing quite a high ratio of debt to disposable income. So generally I think consumers are indebted and trying to pay that down, and yeah, I guess once they've kind of dealt with that, I think it's easier to start looking at life insurance and investment products. Although I think in the first place you should probably save to buy something rather than borrow, but if you're in that situation, it will take a while.
But hang on, you see, this is where we're going all skew here, because just a few nights ago, I was watching Business Tonight, and I think it was either Kevin Lings or Bridget Taylor, who was saying that if you look at the banks' lending, the mortgage lending has increased by about 1%, but unsecured lending has increased by something like 35%. Now that unsecured lending, Schalk, is not going to BrightRock, it's not going to anyone who's selling life insurance, that's going to Pick n Pay and ShopRite, Checkers and Woolworths.
Absolutely, Jeremy. I think that's definitely a challenge that sits. I think there are good and negative things to say about unsecured lending. I think if you look at some of the unsecured lending providers, it definitely addresses a need. And I think there's value in that, for the right purposes. I mean, it obviously gets to a point where it could be abused. But if you think about the main providers of unsecured lending, it's a robust modeling exercise. They actually understand that risk profile of that individual very well. So you get to a point where unsecured lending can be very healthy as well in your economy, to actually boost your economy. I think obviously from our point of view, and I think from a savings point of view, you would want to say rather save and then buy, or from the life insurance point of view, rather make sure that if something does happen, you are protected, and knowing that, for example, your children's education is taken care of, or your debt is paid off. Those are key things that consumers should think about and consider. And I think that's where the trend is going, where what you're saying, unsecured lending, is testament that the economic cycle is times are tough out there, and people want to know, number one, what they're spending their rands on, that they're getting value from it. And I think they would look at investment vehicles as well as insurance vehicles to make sure that what they spend their rands on, they understand, number one, and that it delivers what they expected it to deliver.
But that's why it's a difficult thing to say. I mean, because I can sit down with a Schalk today, and he can say to me, this is what we expect you to deliver. But when I look at that glass, I know it's going to cost me R8.99. That's it. From a trend point of view, are we seeing growth in the investment market? Is it happening or not?
No, there's definitely growth, and actually over the last couple of months there's been a lot of growth, specifically in the investment side. Possibly because money market returns are not what they used to be, not yielding real returns compared to inflation. So there's actually been a lot more in terms of insurers' investment products that have attracted funds.
Once again, it comes back to the timeline. I think you were saying earlier, it depends where you are. If you're young, you should be in equities. If you're older, you should be more conservative into bonds and that. Do you get the sense that people do understand that?
Well, I think it depends on exactly what your needs are. If you need to know or need to effectively have control over that, then I think you do, and you manage it correctly. Whereas I think,
but Harry, I get the feeling that people don't actually know what their needs are.
Sure.
I mean, I would defy anyone to say that if we brought, actually maybe this is something we should do on the show, note to self. If we brought 100 people into this studio and said to them, what are your overheads per month and how much disposable income do you have? I reckon 60% of the people wouldn't actually know what their overheads are.
Jeremy, can I maybe jump in there?
Yes,
I think if you where it differs slightly is what we've seen in our experience over the last few months, how consumers relate to once you've actually got a product that actually says, listen, understand why you are buying this product. Understand, is it for debt? Is it for education? Is it for healthcare? Is it for covering your general expenses? And once an individual sees that that's what I'm actually buying, because this product matches exactly what those specific items are, you actually, number one, you start getting the thinking process going. So guys start thinking about that, and they start adding. They might not know it now, but they're definitely interested to find out, to get the product that match exactly what those needs are. Whereas I think that's something that the investment game,
Yeah, no, hang on. I'm jumping in there. I'm putting my finger up, because what you're saying here essentially is that once you start educating people and you start showing them what is in it for them, things like life insurance, which may have been seen as a grudge buy in the past, are being seen as something positive. Are we getting that sort of mindset change? Is that coming through?
And Jeremy, that's an exciting thing that we're definitely experiencing, because we know people are strapped for premiums. They want to get value from it. But once you actually understand why you're buying, that product matches exactly, and it functions like it. It's not just an education process where it's a piece of paper. It's actually the product that you're buying is educating you at the same time. And we're seeing consumers, number one, are understanding what they're buying. And number two, what's very exciting is they actually now say, I've got a gap. Because I now understand that this product creates, that understanding of that gap. Oh, okay, I'm actually going to focus a bit more resources to that. And that's what I do believe, if you think about financial products, we got to get to, because consumers want to understand what they're getting. I think they don't necessarily know how to get there, but I think there is definitely a propensity of people want to know. And products that can deliver that, I think, is the way of the future.
So in other words, what I was alluding to earlier, saying I can see that and it's worth R8.99, people are starting to go, yep, okay, I'll buy that for R8.99 because I reckon that will be, in 10 years' time, will be worth R899.99.
Absolutely.
Thank you.
And what's key, sorry, to add to that, is you got to be able to have that knowledge continue over the lifetime of the policy. So, for example, our product will continue to evolve with you, but I think it similarly applies to investment products. It's got to evolve with you and change with you as your needs change, and that's fundamental.
Scott, I've now got Marius shouting at me saying, make him keep quiet. Close the door because we're out of time. Thank you for coming to the studio. Harry, thank you for your time as well. It's been great having you guys in here. It's been great having you with us as well, and we'll catch you next time around. Bye-bye.